All right, everybody, welcome back to the channel. Today we're going to be talking about something that's a little bit different, and it's not really a situation we've been in the last 15 years or so, and you'll see just why when we get into it. And I think a lot of people these days are very concerned, right? The markets are rather unstable at the moment. We're in this rising interest rate sort of environment. We're continuing to see the uncertainty with the Fed. We're continuing to just see high debt in some companies, non-profitable companies, zombie companies starting to unfurl. We've seen some of these lose 80%, 90% of their value. We've seen, due to the low interest rate environment, consumer staples with decent yields get pushed up. We've seen the rise of the dividend growth investing community. And while I think a lot of that stuff is all well and good, I think that there's other avenues in this sort of environment that you can use to have low to no risk sort of investments, things that are sometimes backed by the government even, where you could literally up to $250,000 invest money and guaranteed no risk. Now, of course, there are some guidelines. You can't withdraw early, stuff like that. But we're talking about CDs and bonds, right? Who would have ever thought on this channel over the past 5-6 years we've been doing videos, we've been talking about CDs and bonds. But take a quick look at it, and I think some of you guys haven't really been involved. I haven't been involved in CDs since the 90s and maybe early 2000s, but interest rates haven't been that good since 2006, 2007 timeframe due to the ZIRP, zero interest rate policies, and due to quantitative easing and things of the like, where they were just continuing to buy all the bonds that were on the open market, which was depressing the yields. So it'd be cool to actually go into and look at some of these things, coupling it with bonds and CDs, and looking at what the potential is. Now, I think one of the things that is a caveat to this is these are things that you're going to be holding to maturity, and we're not talking about bond funds, which I think is very important because that has a security associated with it. It moves up and down with the interest rates. We're still in an interest rate rising environment. So where we are today, it might increase obviously in March timeframe when we have an FOMC meeting, and it might continue to increase once or twice more throughout the year. And I think towards the end of the 2023 timeframe, we'll probably flatline for a little bit. And I think at this point, we're probably not going to see any cuts until 2024 timeframe. So it could be an opportunity if you guys do like the arbitrage, you do know a little bit about the bond market, and you do like to trade secondary markets. Could be an opportunity in the next 6 months or so to pick up some bonds for an eventual cut situation where you could make money on the actual bonds themselves. But I'm more so talking about the yield, the coupon rates, things like that. So before I rather just continue to go on and on and on about it, let's just hop into it and talk about it on the actual website itself. So I have a few websites open. Sorry, we're going to have the inception here of different websites and stuff of the like, but let's hop into the CD interest rates, right? The first thing I typed in was CDs. First thing came up is 5.15% for a 1-year term. Pretty cool. Ally Bank, 5%, 1.5-year term. Capital One, 5%, 11-month term. Those are very reputable banks, right? Banks that you've heard of before. BMO Harris Bank, I think I've heard of that one before. 5%, 1 year. Some of these $0 in deposit needed. Some of them are $1,000 deposit needed. Go into Fidelity. New issued CDs are kind of coming out at 4.65% for 3 months, 5% for 1 year, 2% for 5% for 2 year, 4.95% for 3 year, 5% for 5 year. 4.8% for 10 year. So those are the kinds of things when you're looking at it, and obviously we're going to talk about treasuries as well in a second, is you're looking for something that has little risk. You can invest in these things and hold them in there for a good bit. Savings accounts even, right? Not checking accounts, savings accounts. Let's just say you need the access to that money in the next 6 months or so, and you just want to have liquidity, right? You can take that money, park it in a savings account up to $250,000 federally insured at specific banks, right? You can't just go to like me and be like, here's $250,000, right? You have to go to a federally insured bank and invest that in a savings account, or rather just put in a savings account. It's the first time in a very long time, 15 years or so, we're actually going to be able to get some sort of return. Some of them are up to 3.5%. I think my personal savings with Amex is up to 3.5%. That's where I send just normal stuff, right? And I have been buying some treasury bonds here, 6 month, 2 year. And I think a lot has to be said with that, just based off the fact that times are uncertain, right? And who knows if I'm going to need that $5,000 or whatever short term. So I just kind of have that parked away. That's my $5,000 emergency fund. If I need it, you know, I have that access to it, and it's not going to be tied up in something that could decline by 40%, 30% over the course of a month or two. It's going to be saved. Now, same thing can be kind of said with treasury bonds here. They're not 100% liquid, but say you want to keep it, you know, getting some sort of income. You know, you don't need it for 6 months. You're going to wait until 2024 to buy a home. That's the sort of thing where you could put it in some of these treasuries and buy them and wait a year until you get the money back, or 6 months till you get the money back to purchase the home. And it's a rather low risk, right? It's not guaranteed no risk, but low risk. Obviously, we're going to have a discussion in the next 6 months about what's going on with the U.S. defaulting and stuff like that. I'm sure you'll see headlines with that in the coming months. But look at some of these. 1 month treasury, 4.6%. Now it's just to say you're going to put it in, and in 1 month you're going to get 4.6%. This is an annualized yield, so you'll get, you know, a fraction of that. You'll get, you know, 0.5, 0.6%. Actually, a little bit less, 0.4%, 0.5% every month, right? But say it's something that you want to have that liquidity, and every month you want to make sure, you know, you can just keep it there, right? And now I think that these things are going to climb into the low fives, high mid fives over the next coming months. I think we're going to see at least a quarter to 50 basis point hike here in the March FOMC meeting that's going to happen the next couple weeks. So I would be cautious about that. But if you have money sitting in the sidelines now, it doesn't hurt to invest some of that into some treasuries or savings accounts or what have you. The savings account, it'll go up with whatever the interest rate is. So that's something that's very nice. I have a video about Treasury Direct. If you guys are interested in buying directly some of these T-bills that you kind of see on here, I have a video already to step-by-step direct you. Otherwise, man, like the CD thing is super easy, right? You could literally go to your bank. I'm sure they'll offer you pretty good interest rates if you have a pretty reputable bank, Chase. I don't think anybody's going to be like, nope, we're going to give you 2%. If they do, you can walk out, go to Wells Fargo or some other very reputable bank and say, I want at least 4.5% for a year, 2 year, whatever, and you're going to get it, right? And so it's something where you have to evaluate from a dividend investing perspective over the next 2 years, 3 years, especially if you're getting closer to retirement. Is this really where you want to put your capital, where you could lose 20% of it, 30% of it? Hell, sometimes you see some of these great dividend stocks decrease by 40% in the matter of a couple of years. Or would you rather just keep it in something that's going to yield you your 4, 5, 6% in the coming months probably, and just guarantee it, right? And very little risk. It's a balance, right? Yes, you could get the 20% return on this dividend stock investment, of course. Some of these things are great. Some of these are great growing companies, so I'm not devaluing that. But when it comes to little to no risk, with CDs being very little risk or minimal risk comparatively to an equity, you have to evaluate what kind of return you want. And we're in an environment now, which we haven't been in the past 15 to 20 years, where you have that ability to truly get very little to no risk and actually get somewhat of a return. And I haven't seen something like that since when I was kind of investing in the 90s, where I was getting 10% CDs, and hell, I think even my savings account was getting 10%. I was like, this is so cool, Mom. Like, look, I had like my little savings book where like every time I went in, I had a transaction and they like stamped the book and you could say, hey, you got interest. That's so cool. Like, I was just like, what? Mom, I don't get it, Mom. Like, I didn't put any money in there. No, honey, it's like your interest that's coming in. Haven't seen that in years, and you don't get it in your checking account these days. So we're finally in an environment where things have kind of turned around. How long it lasts, I don't know. But it could be a cool opportunity for you to buy something, 5-year, 10-year treasury. Give it to your kids, your grandkids, something of the like. And it's something that's going to be a little bit different than the stock market. And it's something that, for those of you that are a little bit closer to retirement, I know that you're probably watching these videos as well, some of you in your young 20s, you have to gauge what's right for you in your personal finance journey. So that's why I always like to make these videos. They're a little bit different, but at the end of the day, out of the couple hundred people that'll watch it, I'm sure it'll help at least somebody. So thanks, guys. And share with friends if you think it's useful. it's crazy. Different environment. So talk to you guys soon. Cheers. Bye.